perhaps, Raghav, you could give us a little sense of your background in real estate and how you work with high net worth investors there in Kenya.
Yeah, sure. Thanks, David, again, and pleasure to be part of this panel. So I work for a company called Acorn Holdings, which is a specialist in specialist developer of rental housing. We established two real estate investment trusts at the start of 2021. These are REITs that are focused on investing in purpose-built student accommodation. In fact, we're the first institutional providers of PBSA in Kenya, and we've established the first student accommodation focused REIT in Africa. And so that's the opportunity that we introduced into the capital markets about 1.5 years ago. What we have done for individuals, for retail investors, whether they are high net worth individuals or even folks with who just want to lock away some money for savings, we have also introduced a retail aggregator platform, which we call VUCA, which allows investors to invest as little as 50,000 shillings per year into one of these REITs to give them a steady state, predictable, coupon essentially through dividends that are paid out by the REIT.
Okay, fantastic. And do you find that investors are familiar with the REIT structure as a way to hold this investment? Obviously, they might be familiar with buying a building outright and receiving the rental income. Are these structuring options familiar with the investors you deal with?
We're actually the second and third REIT in Kenya, so the REIT market is still very nascent, still not deep enough, and so it is. It obviously involves a lot of kind of knowledge sharing and kind of market education to get investors up to speed. And in fairness to individuals, frankly, a lot of sophisticated investors aren't familiar because you just don't have that opportunity or those options, right? So it's something that we work on, and slowly people are getting there. I think the benefit that they're seeing is, as you mentioned, instead of having to buy like a full building or a plot of land, which is obviously, a much larger ticket and also somewhat illiquid, or it has that risk of illiquidity, our tradable instrument means that, you can invest a small amount. Like I said, it's about $450 that you require to come in, and you're able to trade in and out because it's listed on an exchange.
Okay, thank you. And Raghav, just to bring you in, just a quick result from the poll. Real estate is the largest component of those alternative investments, which people might consider. No surprise there, but perhaps you could give us a sense of what your investors are looking for at the moment, given, as Brian said, the conditions in global markets.
Yeah, I think, no surprise there. I mean, I've been in Kenya for just 2.5 years, and this love for real estate is overwhelming. You find folks are looking to buy plots of land, close to their hometown, close to their villages, just because they feel this kind of inherent kind of safety, that you're locking your money away in something that you can touch and feel, that it's not going to go away. And I think, a lot of people have been, there are a number of stories, within this market where people have been burnt by, investing in Ponzi schemes, propagated by developers, and obviously have got burnt as a result. So I think what you find is that, when we're speaking to investors and when we're kind of communicating to them about what we offer, what resonates is the fact that what they're coming in is a regulated investment vehicle, right? It's something that, has the capital markets authorities supervision on it. There's obviously then a level of comfort and confidence that one can attain from the fact that that you're not going to be able to just do whatever you feel like with the money that is invested. I think what also has resonated is the fact that typically when folks have invested in plots of land, what you find is that when you want to liquidate, when you want to actually monetize that investment, you originally you did it on the basis of a hunch, or you were told by a buddy that, oh, look, this area is going to come up, and you'll make lots of money. But when it comes to actually monetizing it, you find that no one's willing to buy that plot of land off you, or the value's gone down. And so you're kind of like, left with egg on your face, because what you thought was going to be your savings basket has dwindled as a result. Whereas what we're able to offer through our VUCA platform is giving folks access to real estate. So kind of touching that chord of that love for real estate that we spoke about right in the beginning, but also giving them consistent returns. So it's not like, you're getting paid a dividend every 6 months. So you can already see your investment in that real estate, in that form of real estate, is actually delivering returns, rather than something you might find out 5 years down the line that, hey, actually, I don't have anything to look for from this investment that I made.
So that extra layer of governance in the structure, the liquidity, this is really evolving in how investors can extract value from a traditional asset class that they feel that they know and understand.
Yeah.
Excellent. Raghav, just to bring you in, on the real estate side, I'm seeing real estate investments being offered with a crypto angle, or with payment in crypto, or part of the return rolled up in new tokens or coins. Obviously, in places like Dubai as well, properties being sold with using crypto for exchange. How do you see these digital currencies featuring in the real estate world on the investment side?
Sorry, David, could you just repeat the last bit of that question?
Yeah, sorry, it's just to say whether you see cryptocurrency featuring in the real estate investment world. There's a lot of innovation going on where people are trying to create investment opportunities, perhaps linked to a new token where the return is within a cryptocurrency. Have you seen that? Do you see that at all filtering through locally?
Well, the one thing that I think we're all seeing anyway is the tokenization of real estate, which is in a way related to what we're doing. I'm not the biggest expert on crypto. I'm a little boring that way. I think something that I can't get my head around, I usually run away from. But for me, I'm sure that there is trading of real estate happening with the use of cryptocurrency. I think that vis-a-vis Africa, much as Brian also touched upon, and you did as well, I think until the regulations are there, or there's a regulatory framework there, I don't really see it kind of permeating within the sector just yet. I don't see it happening in the near future. I think there's a lot of kind of cleanup that is required within the traditional sense of real estate, let alone kind of allowing, this new form of, let's say, I guess, currency to come in. I do see that there's significant benefit for blockchain in real estate. I think that's been well regarded. So I think before you get into crypto, I think you need to use what blockchain is about to inherently help, real estate in terms of registration of land titles, ensuring that transactions are mapped out as they should be. I think that's where you find there's a lot of corruption. So I think that's where the scope is. That's where I'd like to see it initially, rather than kind of thinking about how crypto can get into real estate.
Okay, thank you. And the second part of Sharon's question for you, Raghav, is just looking at current local opportunities in Kenya in real estate. Perhaps, paint a picture of some of the things that you're talking to investors about now, or where you see markets moving. Any micro markets within Kenya that you see as attractive proposition for private clients?
Yeah, I think real estate is an interesting one here in Kenya. I can probably speak more about Nairobi than I can about the other cities in the country, but I think what has happened historically, and even to some extent continues to do so, is that most developers focus on the let's say middle to upper middle income segment, and then high, kind of really the luxury level of real estate, which is of course not where the market is at, right? When you have 90% of the population, arguably even more, earning less than 100,000 shillings a month, which is about $900. Targeting real estate for about what you would say is maybe 10 to 20% of the population is kind of a losing cause. I mean, any business should focus on scale rather than a niche sector, right? Unless you can really obviously derive significant margins out of it. So to us, the affordability of housing is very important. We believe that that's where the majority of the market is. And so if anyone is looking for investing in real estate, I think, what they have to see is that is the real estate that you're investing in what the rest of the population is looking for. If you're looking at it for a yield play where you're interested, let's say in buying an apartment, for instance, what you have to do is look at what is the yield you're going to get. So it's important to look at what is the rent that you can expect from that investment, and then does it fit in with your yield expectation. I think we are in an environment where the typical argument of, oh, well, I'm also buying it for capital appreciation. That's a little soft right now because of just the status of the economy. We all thought we were going to be out of the woods when we were done with the pandemic, and yet the pandemic doesn't seem to go away. And on top of that, you've got this war happening, which one would think doesn't impact us in Kenya that much, but it has. It's significantly jacked up the cost of living. So I think right now, I mean, my sense is that, within the residential space, I think it's probably a wait and see for now. I don't think, unless you're clearly able to tell that you're getting significant value being left on the table, I'm not sure that it's an area that you want to look at for personal investment, unless you're investing with a developer or an entity that is able to deliver consistently strong returns on the basis of fundamental demand dynamics.
Okay, thank you. Great. Raghav, I imagine you see the same trends, and that the platform on which you're offering investments is crucial and an important part of that jigsaw in order to raise investment for such projects.
No, 100%. Look, I mean, it's all about access to information and access to knowledge as well. The wider you can spread out what you have available and what you're offering to investors, I think that's the key to success. And Brian's, mentioned it a number of times, but with the proliferation of smartphone usage, it just makes sense that you need to be making your platform available for access to anyone and everyone.
Okay, thanks. And Raghav, I mean, from you on the real estate side, are there certain types of real estate that are more vulnerable in a recessionary environment? I mean, you mentioned at the top student lets. What's the most defensive part of the investment spectrum, do you think, for Kenyan real estate if there are global headwinds and a recession?
I think for us, I mean, just to kind of, let's say, use an example to illustrate my thinking on this. When you look at something like purpose-built student accommodation, the reason that we like it a lot and we consider it a defensive asset class is the fact that the demand for student accommodation is driven by two fundamental needs. One is the need for education, and the other is the need for housing. Both those needs don't necessarily go away just because there's a recession or there's a pandemic or whatever it is, which points to an inherent defensiveness in such an asset class. And I think that's what, to what Brian just said, there's always going to be opportunities, but I think, it behooves any investor that at the time of a recession, you just got to make sure that you look hard, you do the right piece of analysis, before you make that investment, because at a time of a recession, you can, be left holding nothing. And that's something that you want to obviously look out for. For me, for instance, I would not invest in retail right now, right? Retail real estate. The fact is that, cost of living is going up because of to Sharon's question, the crisis in Ukraine is impacting global supply chains. It is resulting in, everyday cost of living going up. So people are going to need to kind of hold on to their purse strings a lot more. So are they going to be really going out there to malls and other retail areas to go shopping? I doubt it very much. But there are other aspects. You could look at investing in logistics, industrial warehousing, right? With the buildup of e-commerce, that would present opportunities where people start shopping less in malls and more through online platforms. We've already spoken about affordable housing. I think that is, because that caters to the mass market, and I think that's where opportunities do lie. But I think it is important, given the environment that we're in currently. I think folks need to be careful in how they deploy their funds and make sure that they're doing it in the right way. I probably am a little bit more optimistic. I think we'll probably start seeing light at the end of the tunnel, probably by the end of the year. I don't, but who knows? I don't have a crystal ball, so we'll see.
Faith, absolutely. Raghav, I mean, do you take direct investors, or do you work with intermediaries, or how do you tend to work with other advisors for people looking for a bit more information on real estate investment?
No, with individuals, it's mostly direct investments. I think the other thing to note is that, as far as the financial advisory sector is concerned, it's not that deep. I think it still needs to be regulated. Like if we compare it to what's there in the UK, where you have IFAs, but it's very much a regulated space. Where people go through examinations and certifications in order to get to that stage. I don't think you necessarily have that to a degree that would give anyone a comfort. So what we, much as FXPESA does, we also hold seminars, we do financial planning talks, across the board. And then we offer what we do and we leave it to folks if they want to invest. Otherwise, if they're still not comfortable, then that's fair enough.
There's huge opportunity now to provide information, have a direct dialogue with clients. So that is wonderful.